All right, guys, let's talk about some losers today. I want to go over how you can learn from a losing trade. Now, I made a post on my Instagram. I lost like 50 grand in one day. That's my biggest one day loss. And, it was cool to see people talk about their one day losses. And some people were sad. Some people made avoidable mistakes, like getting scammed, giving somebody their money. Someone said, I'm going to triple it, stuff like that. You do got to be careful of that. But now, when you lose based on a trade, there's a lot you could take away from it. Losing's not always bad. I lose a lot actually. If you guys go through my videos and see when I go over my trades, the losing ones, and I'm going to make another one here soon after the end of this week. You know, it's options you're going to lose. You just got to accept that. But it's now learning from it. If you go and lose on a trade and you're not really understanding why or finding an alternative to what you could have done better, that's where you're going to make your mistake. So I'm going to talk about back testing it. I'm going to show a loss I just had recently on Snapchat. What happened with it? I bought 100 contracts. I could have made a lot of money on it. And, to see the difference into what could have, how I could have done things better so I could learn. And this is what you guys should be doing paper trading. This is why I say, options are risky. You guys go see any of the latest videos, these options are moving so fast and could go from worth $1,500 to worthless in seconds, so you guys got to paper trade. Options are really risky. You could lose a lot of your money. And if you're new, go through the free trading course, check it. It's in the bio or the description. Go through that, set up a paper trade account. We have all the instructions on that, and practice. And it's so you could do this, so you could make these trades and see, okay, what was the end result? Why did I get into it? And what were my alternatives? So that's what I'm going to talk about here today. The Snapchat put, if you go saw, I talked about it. I talked about it in my video, and I said Snapchat is one I want to look for, especially near this break and what's going on with Congress and all that. And you see, it's still at a good point, where if it breaks below 1050, it could go even lower. And now it did, it hit 1009. Now it's at 1024. But even then, this was the play. And you see, when I made this, I got August 21st. So go to August 21st here. That was like what, right here? At a dollar away. It was a good play. I hit it on the head, but I ended up walking away with a $550 loss because I bought August 31st, 1050. So come August 31st, I was literally one day late, right here, it was at 1094 and then dropped the next 2 days. That's where the bulk happened. But what I'm saying is go through your trade, find out what trade it was, and now, okay, find out why you got it, where did you make your mistake, and go from there. So for me, I was right on my trade idea, my trade thesis, everything. I was wrong on my timing in terms of the contract. And I look back and I'm saying, well, why didn't I get 1 week out or 2 weeks out? And let's take a look. I go through then and I find the contracts at the day that I was supposed to buy them at, and I see what was different. So in this case, I paid 5 cents for those contracts. I could have paid 8 cents and ended up spending $800 instead of 500 to get the same 100 contracts. That might have been a better choice. Or now, if I look towards September 14th, what were the 1050s going for? And essentially, what I'm doing is seeing what prices they were at. So now, when I'm put in the same scenario where I'm like, okay, I think it could do this, I'm feeling this, what is going to be the difference? Should I be turned off by a 30% increase in the put price if it's going to give me X amount more time, and how much more is that going to help me? But in that case, I only did 10 days, and maybe I should have went out for a little longer on that big of an amount. And that's what I learned, because at that same time, if you see some of the plays, go through my videos and you could see the gains I made of stuff I bought on August 21st, I could have made a lot more money. I could have bought so many different things that could have been a lot better. So I messed up on that, and I could have bought a lot more. But pretty much how I'm back testing them, how I'm learning from it, is by going back through the option chain and finding the alternatives of what I pretty much realistically could have bought at that same price and how it would have panned out for me. So I could have got the 950s. I would have really just broke even on those. I could have got these for what, 5 cents, and then these would have been up still. Again, that would have been 400%. So even the $10 slightly out of the money would have been better, or for paying the same price slightly out of the money would have been better, or same strike and paying what, 30% more. Now this is double the price, so I would have had to go to the September 7th And I think the same scenario exists there actually. Damn, no, these were even cheaper. So I could have got the 10s for cheaper. These are at 30, but yeah, these ones I could have snagged for about 7 cents, 2 cents higher, which is about 50% now that I put it in perspective. So I have to learn and say, well, was this a good trade? What was good and bad about it? And for me, what I learned from this trade, I was right, but I should have scaled down how many contracts I bought. I shouldn't have put 500 bucks into a smaller price stock like this that just didn't move as much, and I should have got more time on a bigger position like that. So that's what I took away from it, and it's definitely, this play coming into this next coming weeks and every other play, it's been giving me my warning signs, and I've been making sure not to throw money into garbage, in the sense of what I mean by that is by buying plays that don't have the same earnings potential. Whereas I'm buying $200, $400 of Amazon, Google is putting me in a position to make 1,500, 2 grand, whereas 500 bucks here is just a lot more harder. Or what I should have done, the next alternative, I could have got in the money on the other ones. I could have just spent more money and gone for the 1150s and went closer to the money. So that's what I took away from there. It's going to define it. It's not going to make me act fearful, or if I see an opportunity, you don't want to get paralyzed, but at the same time, you want to keep this stuff into context and make sure you don't really forget these learning lessons, and you don't, it's awful to keep repeating the same stuff. That's why, again, paper trading, logging, going back through the option chain, seeing the current prices of stuff, how you could have played it, what were your alternatives. That's the best way to learn, and that's what I recommend for all of you. So I'll leave it there. Hopefully you guys learned from that. Hopefully you go through your trades and learn something. If you did, make sure you drop a like on this video, subscribe, and leave me a comment. Love you guys. Stay in school.